1 month after inflation fell to 2.7%, the central bank is now reporting an even further decline. It's now down to 1.5%, the lowest in recent history. Food inflation, which has been the major driver of headline inflation, fell sharply to 0.4% in November from 3.5% in October. The decline in food price inflation was led by declines in the prices of milk, cheese and eggs at minus 0.97%, bread and cereals 9.3% down, vegetables 1.5% down and meat 0.3% down. The only basic commodity which registered an increase in November was sugar, which rose by 2.3%. The central bank says this was because of a rise in the price of sugar on the international market. But the real driver of the sharp fall in inflation is identified as a continued slump in domestic private demand. Consumer credit contracted by 3.1% as lending businesses slowed sharply. The reduction in credit expansion in combination with higher net fiscal injections was reflected in an increase in banking system liquidity. For the period October to November 2009, excess reserves averaged close to $3 billion, 3 times more than the average for the corresponding period in 2008. As a result of the excess liquidity, commercial banks were asked to deposit $2 billion in interest-bearing accounts for a minimum of 1 year. The central bank says in the coming weeks, additional measures will be introduced to absorb excess liquidity. The central bank says the persistent slowdown in the economy against the backdrop of subdued inflation provides additional scope for monetary policy that is geared to boosting private sector economics. As a result, the bank has decided to lower its main policy rate, the repo rate, by 50 basis points to 5.25%.